the Insto Fomo or the high net worth guys I can feel that this is the second round of FOMOing vis-a-vis, in 2021. So they're coming in, but the thing is they're not looking for outsized 10x, 5x kind of returns. They are happy with something between 30 to 50% annualized, which is still a lot, but they're happy to take a little bit more risk. So we are seeing a lot of initiatives, we're seeing a lot of developments in this part of the crypto world.
Whether or not now that the institutions have such a high participation rate in Bitcoin, how this changes the market structure. We've seen a massive decline in weekend trading volumes, massive decline in non-US hour tradings. I've noticed that the whole signature of the trading is very different between US hours versus non-US, and a lot of the volume is around the price fixing window when markets open. When you look at this, what does this tell you? As a manager, how do we need to adjust? Or as an investor, how do we need to adjust? Let me start with Marco first, and I'll go to Marcus.
When I used to trade crypto, I think 4 years ago, like 2019 or 2020, it's very different. It's mostly participants are retail, right? They don't look at fixing, they don't look at this market. They trade on weekend, they try to move the market on weekend. They trade in random hours, right? If they want to dump the token, they move the token. I think with the more institutional involvement, back now collaborate more with the institutional market where we look at fixing, we look at option fixing as well. We look at those kind of factors that we now, as a manager, we have to look at all these fixing hours. And I think the trading hours kind of shifts that more 100% correct, Alvin. It's more now towards the TradFi market. If the dominancy of the ETF, because it doesn't trade 24 hours 7, if they lock up more liquidity, this just have less liquidity to trade during non-market hours, right? Which are the crypto is supposed to be 24/7 hours. So if you see more liquidity, that's going to trap on TradFi market, like the traditional ETF market. That will kind of take away the rest of the trading liquidity for the out of market hours. That's how I see it. The market will even become more thinner.
Yeah, I agree. It feels almost unnatural in the way that crypto is now shifting into a trade finance paradigm rather than the other way around. And maybe it's early days, but I find it a little bit dystopian in a way because the whole idea was to decentralize it. And now we have actually an increasingly centralized asset base out in the US. Marcus, and then they'll go to Chung. Marcus?
So I think when you think about it, what is the Bitcoin white paper's, title, right? The peer-to-peer electronic cash system. And I think it was changed when the miners basically decided in 2017 that the block size should be capped. And then it has become basically digital gold and is no longer a peer-to-peer cash system. So I think the market has sort of like evolved towards that. And I think that's why Bitcoin as an utility is not, I think, what we're trading now. We're trading really more sort of like the gold aspect. And, when you look at over the decade, really, or the decade and a half, there have been different cheerleaders for Bitcoin. Let's say from Bitcoin Jesus to, to whoever came after, right? And you have, of course, Larry Fink, and, he openly talks about digital gold and really nothing else, right? And he wasn't really pushing Ethereum. He was just pushing digital gold, right? So that was really like the narrative. And I think it's just like natural, I think, how we have evolved. And I think this really, we have to adapt to the market, right? We have to see how we can predict the market, make money, position ourselves. And I think it really suits our style, really, from like market structure analysis, understanding how big institutions change their view when they might be allocating, really looking at the data, right? The data meaning really when there's a change in stablecoin, when there's change in futures leverage, right? I mean, one theory is, of course, that the drop last week or 2 weeks ago was like so deep that a lot of futures traders were stopped out, and it's going to take some time before they really can come back. And they were the ones who really pushed back the market in May and in July when we had these dips below 60. So that's why we thought for the next rally, it's going to be a little bit more on the timid side, a little bit on the weaker side, because futures traders are just not the ones who can put down a lot of money right now. And I think we look at this market this way, and that sort of helps our clients to position for it. And our interpretation of what the Fed does, what are the macro events. A lot of people think, of course, the Fed is going to cut next month, and that's going to be bullish for Bitcoin. Well, there's an historical precedent that we have been pointing out, and I think we are pointing out those kind of things, right? And we also think there's a lot of buying, for example, this week from CTAs in the equity market. There's a lot of buying corporate buybacks over the next month, so that's going to be helping to keep risk prices up through US stocks and so on, and some spillovers into crypto. And that's kind of how we analyze the market, and that's kind of like suits as well, right? I mean, yes, weekends are a little bit more boring than they used to be, like last cycle or the cycle before, but we adjust, right? So that's how we handle it.
Yeah, we just manage expectations. On that note, Chung, when you talk to your clients now, and I'm thinking of a lot of the clients that we're talking to are coming back, either got burned last cycle or they missed out on it entirely. But now they're finally garnering the courage to talk to advisors about putting some capital to work, especially since US markets are kind of fizzling out a bit. And even though there's catalysts for upside, they want a little bit more beta for this whole debasement of the US dollar and what that means. So how are you positioning your clients right now? Are you putting them into like a buy and hold type of mentality where we're at this second leg of a dip and therefore more protracted third wave is coming up? Or are you recommending a more actively managed strategy?
Actually, a lot of our clients and coming clients is that they're looking for yield. So yield-seeking clients, yield-seeking investors, and they are more comfortable with coming into crypto now, given that Larry, he's basically waving the Bitcoin flag. So basically, BlackRock has eliminated the stigma that cryptocurrencies or Bitcoin are fake. And when you have a $10 trillion asset management company coming in to endorse Bitcoin, that gives a lot of confidence to the family offices, the institutionals, ultra high net worths to come in. So the Insto Fomo or the high net worth guys, I can feel that this is the second round of FOMOing vis-a-vis, in 2021. So they're coming in, but the thing is they're not looking for outsized 10x, 5x kind of returns. They are happy with something between 30 to 50% annualized, which is still a lot, but they're happy to take a little bit more risk. So we are seeing a lot of initiatives. We're seeing a lot of developments in this part of the crypto world. We have like the DeFi's, you've got basically you have your meme coins, etc. But we tend to focus, because our clients, they are more sophisticated. They look at products that actually are built by proper TradFi people with proper compliance, with proper background, and they know how to manage risk. So to your question, Alvin, we are seeing a lot of them coming in. So this is where our time, our resources are spent right now.
Yeah. Marco, what about you?
Product-wise, I've seen same thing, but it's very extreme. Even some of the NC clients are looking for 10x, right? Those are the more VC guy. I do have both sides of it. Some guys are looking for fixed income. It's like, okay, I want, but then I said, okay, crypto always to me is not a fixed income market, right? So I always say, okay, if you're looking for fixed income, you should be looking for RWA, which that's why the crypto people are trying to bring the RWA on. It's okay, let's bring these guys onto crypto as well. But I think in the end, it's okay, we are fighting for the same pile of liquidity of the clients. Which product are we going to offer them? I still think it's the 10x stuff that they really got excited and they want the jackpot, like, okay, GameFi. It might not be like the last cycle or the cycle before where NFTs or mint coins for this cycle. But I think they're still looking for something more exciting in this market. Now, I think if they're looking for something boring, then crypto should not be the right market they look for. They have all these fixed income from money market fund that's 5% to 15%. I think if they wanted a bit more 10x and then somewhat that we can do some risk management for them, they don't go to zero directly, but they're betting on the upside. I think those are the things that get them really excited. So we're trying to mix and match, see how the different clients actually wanted their risk appetite. But I feel there's still quite a lot of clients who wanted the 10x, like the one that are really into AI, which we talk about, who have been drying up liquidity as well, that have been one of the theme. So I feel that if crypto don't offer 10x, we are losing out to those guys who are from AI that is offering 10x to the market.
Yeah, that's a fair point. I don't know if you're going to get 10x from RWA anytime soon. That's
definitely. That's why
right?
I said RWA is a thing that trying to get the non crypto native people to come and use a crypto technologies to actually be part of this asset class, and maybe we can do some DeFi lending borrowing afterwards with this RWA. I think that's already a big milestone that we finally can cross these two liquidity pool. I think right now, when you look at the market, we are fighting for the same liquidity pool, which are already minimum with this kind of high interest rate environment. And we don't try to work together, able to release that liquidity, then that will, down the road, will become more fragmented. It's more difficult to...
Are they incentivized? I don't see the institutions incentivized to release that liquidity. Right now, they have that liquidity in the perfect instrument. The ETF is the perfect instrument. And I'm reminded of what happened when BlackRock launched the gold ETFs. They were able to basically drive pricing in spot with paper. And they've been doing that between them and the bullion banks, been able to drive pricing in spot using the paper for pretty much the last 20 years. And so ever since then, you had this first pump in gold, but it kind of became a very managed curve thereafter. So I'm wondering, should we expect the same type of low vol, low tempo type of growth in crypto, given that the same players are doing the same thing?
Yeah, that's actually my biggest worry. But look at the August 8th market, we still have some volatility. I think vol in crypto overall is still high. We finally create this single day of drop of 16% to 19% of drop in Bitcoin that day, which actually created some volatility. We thought it's going to be a down market for summer, actually create some vol. So I think structured product markets are still growing in this space. But I think clients from a few years time should look beyond Bitcoin or look beyond ETH and look at more newly upcoming kind of either their infrastructure token like Torn or AppTops, or they should look at more real usage applications that is trying to cross paths with.
Okay, let's dive into that because that's one of the big questions that I had as well. So the ETH has been incredibly underwhelming, both in Hong Kong and in the US. The ETFs in both places have done absolutely poor volumes and hasn't been able to garner much interest. There is no such thing as a Solana ETF yet, and there's no intention for anytime soon, apparently. But Solana was apparently deemed as the ETH killer for the better part of the last year, and it was the one protocol that triggered the first leg of the run roughly a year ago when Firedancer was announced. So I think the bull case for Solana is pretty obvious. So I think the question I have for you, Marco, maybe you can start off and I'll go to Tiong. What's the bear case for Solana?
I think, we have talked about it right now. If you look at the top tokens of Solana, it's not really DeFi. It's more focused on MEM, GameFi kind of usage for Solana. I think going forward, which it's a healthy ecosystem, that if you're building layer one, right, you should now focus on a particularly pathway where, Solana is focusing on MEM, GameFi, maybe Chainlink. If you look at Chainlink, right now they're surfacing or they're using more towards RWA. If you look at Polygon, it's more both, right? There's some real asset usage at the same time, some GameFi. So I think as a founder or a developed team for layer one, I think going forward, they should find a sector that they want to surface on and take that chain to the maximize and using that blockchain technologies actually to dominate that market space. So I think Solana done a great job of maintaining that degen sector of people, that people are interested in MEM, people are interested in GameFi, less on DeFi. If you look at other layer one, they focus some Ethereum or the other layer focus more on DeFi protocol. And I think if you look at Torn, which is an upcoming one, they focus more on gaming as well. But hopefully that the chain itself can evolve into different sector. That would be a good thing in the chain. I think some of the chain have been too
Sun
focused.
Is exciting because it's capitalizing on the massive network effect that Telegram has in its existing install base, right? I think that's the story behind Ton.
Yeah, but if you monetize it just on gaming, it's a waste of that 900 million users. I'm just saying that people can look beyond just gaming, a short-term more focus, instead of more long-term plan that work along with more the Web2 sector guys who already have real adoption case and trying to bring those use case onto the chain. I think that would be a more long-term play, which I'm looking for. See which chain can actually partnering up and have a more long-term play. You look at Chainlink, they're looking for more long-term play for RWA, but it seems like it doesn't get the degen guys very hyped. That's why the pricing of Chainlink, as you see, a bit slow, but then that's a opportunity cost that they have to look at. If they go for the degen guys who love to pump and dump, then I think Solana and some of the other chain might shape better because, those are the degen guys. It's just a different clientele that the chain are going after. See which kind of clientele that they want to go after.
Marco, so hold on a second. Let me ask Chung. We have a degen in the house right here. Chung, from the charts, and I'm not able to pull it up right now, but if you look at the charts for both Polygon, Chainlink, Ton is kind of okay. These are not good-looking charts, right? They're not good-looking charts. So what, from your perspective, what do you need to see to drive, your investors back into these, I guess they were called legacy chains, except for, Sui and Ton, right? The other ones he mentioned are older chains. Maybe some would consider forgotten.
Yeah, Alvin, I think, first and foremost, I would like to touch a little bit first on Solana. I think if you remember the previous cycle, Solana had actually competitors in Luna and also in Avalanche. So we had this thing called Solana Vex or something, right? But now with these strong competitors gone, Solana, for lack of a better word, sucks up everything that belongs in that genre, right? So Solana is basically profiting from that. Gas fees is super low, transactions is fast. So a lot of pump and dumps, a lot of Ponzinomics happens within Solana. For good or for bad, that's the role that Solana plays. The clients that we basically facilitate, we tend to, again, facilitate more institutional, more clients that are less degen. So they have stopped looking at all these, small tokens and stuffs. They do look at Solana, given that it's still quite one of the biggest token. But, the smaller ones, they have stopped looking at it. The builders that we work with, the builders as in those projects that builds DeFi protocols, and ambiguously Ethereum, ETH is still the better chain for them. Because
really? So ETH still has some life, is what you're saying. I'm under the impression that ETH, right? ETH is something that the financial institutions would really like because it has a very long proven track record for security.
Yes.
It does have an identifiable community that it can reach out to for the build out. Fees have come down a lot, but it's just not as slick and as fast as Solana is. So with that, I think that's a great point to wrap up. We have an exciting quarter coming up. From the sounds of it, everyone is not max long, but comfortably long coming into Q4. And I think that bodes well for any institutional investor looking to start their allocation today. Thank you again, gentlemen, and we'll catch you on the next one.